Hey, everybody, welcome back to the Mustard Seed Podcast. This week I have on Fred Krueger. Fred, welcome.
Joe, thanks.
Glad to have you here. This is going to be a really good conversation, and we're going to get, I guess, futuristic and hypothetical, but I think it'll be an interesting thought experiment for a lot of people. The topic that we wanted to talk about is what does the world look like at $10 million Bitcoin? So there's a number of different points and questions that I have for you here, and we can have this discussion, but I kind of want to start off fairly open-ended and just, see from your perspective, what does the world look like at $10 million Bitcoin?
Well, I think the first thing to think about is $10 million Bitcoin means roughly $200 trillion market cap for Bitcoin. And if you look at kind of world money supply right now, right, global M2 global M3 is $150 trillion, right? Now that's going to grow. So that'll grow to 300 trillion in a decade. And I think there were Bitcoin 10 million. We're kind of realistically looking like 2 decades. So it's going to grow to about 600 trillion. So even then, Bitcoin will only represent a third of global money supply, but it will probably be bigger than the U.S. dollar by then, right? In terms of the size of it. And certainly relative to base money, it will probably exceed global base currency, which is all the money that the banks have at their central banks, plus all the actual cash. So I do think that we're looking at a world at which Bitcoin is going to coexist with the dollar, at that right in the United States, right? It will coexist with the dollar. And I think even worldwide, it'll coexist with the dollar as the means of settling international transactions. So I think you have to start there that we're going to get to a point, in 20 years, where we're going to have, Bitcoin will be part of the equation. I don't think it'll be everything, but I think it'll be part of the equation. And I do think that a lot of people are going to start to denominate things in sats. And I think that's really where things get interesting.
Awesome. I think that's a great starting point for us here. And I pretty much agree with everything you just mentioned. One common, hurdle that I think a lot of new people or people will have when we mention like, oh, Bitcoin can reach $10 million per coin one day is they'll say like, oh, well, pizza at that point will cost $10,000 per pizza. So are you saying like, will this be in nominal terms? Will this be like somewhat real terms? Like, how are you thinking about does $10 million Bitcoin mean hyperinflation?
No, I don't think it does. I mean, it might, right? There's some chance. There's always some chance of hyperinflation. I wouldn't say it's like a 0% chance. It's not on my bingo card really for what's going to happen in the next 2 years in America. Although, could we see sort of 1970s style inflation? Yeah, very possibly, right? We could see 10% inflation, 7 to 10% inflation. I think when you're dealing with inflation, you really have to ask yourself, as Michael Saylor said, it's a vector, right? So it's there's no one inflation rate. And I think specifically, if you're looking at, the inflation for a college student, right? Well, they're going to need the price of a Big Mac, right? The cost of, rental unit somewhere, right? And those things I don't think are going to go much beyond 4 or 5%. You know what I mean? I think those things. So I think that even if you're looking at 20 years out, you're looking at something like a little bit more than doubling, in terms of price. I look back at 20 years ago, things were not 5 times as expensive as they were 20 years ago for the base necessities. But then I think once you start looking at college education, luxury goods, those things are going up much higher, more like 10% a year. You know what I mean?
Yep. Yeah, absolutely.
I remember when I was in in school, $20,000 a year was considered a lot. And, I'm paying $100,000 right now for NYU. Yeah, so yeah.
Yeah,
So that's a 5X,
definitely. Yeah, it's crazy to think about. So yeah, I
Yeah.
guess like your point overall is like, okay, Bitcoin can reach $10 million per coin over, next couple decade or two. And that doesn't necessarily mean hyperinflation.
No, I
Bitcoin,
think there's some inflation. Like
yeah,
I would say base case divide by 3. You know what I mean?
yeah.
Somewhere between 3 and 4, right?
Mhm.
So Bitcoin's going to go up 100x in purchasing power. It goes up 30x or 25x, but
Yep.
still an
Yeah.
amazing opportunity of purchasing power, life changing, right? For those who actually hold throughout the whole period.
Absolutely. And in this scenario, do you see it as just another asset still in a fairly diversified portfolio? Because as you mentioned, like it would be a part of the M2 or M3 money supply, not even necessarily a majority of it. Real estate would probably be bigger if I had to guess. Equities might still even be bigger. How do you think about that in the context of not just money itself, but other asset classes?
Yeah, I mean, I think those other asset classes are probably going to grow, at about their kind of historical rates or less. Okay, so I think there's some case to be made that real estate might demonetize in the favor of Bitcoin as an asset class, because it can only grow. Right now, we're pushing out these kind of valuation metrics, like real estate to income levels.
Yeah.
Right now, that's 8 times. I don't think you get to 20 times. You know what I mean? Like, people aren't going to buy a house and I have to spend every dollar I make for 20 years to buy this house. Maybe if there was no alternatives, yeah. But I think people will be, no, I'm going to buy Bitcoin rather than buy that house at 20 times earnings,
Mm.
So I think we're getting to these very stretched valuations in some of these assets. And I think stocks is the same, right? I mean,
Yep.
as you use stocks in a portfolio, you're basically implicitly increasing PE ratios unless the earnings go crazy, right? But the PE ratios are also going crazy high, right? So, I think that's going to put a little bit of a cap on some of the other assets, the two ones being, real estate and stocks. And then, I think bonds are just a terrible story kind of for the next couple decades. So I do think there's going to be growth away from those assets into Bitcoin. So I think Bitcoin's going to take a bigger and bigger chunk.
Mhm.
But just given the size of the fiat system, it's still not going to be the majority by any means. I mean, it's still probably single digits,
Yeah.
even 20 years from now. So I think that just tells you how early we are. That you can sit there and say, I think we're going to be at $10 million Bitcoin, and yet Bitcoin's to be less than 10% of the world's assets.
Yeah, I agree. Which is it's mind-boggling to even
Yeah.
think about that.
Yeah.
And I agree that obviously Bitcoin in a way is going to continue or going to start maybe demonetizing real estate, equity, so on and so forth. And maybe perhaps it follows a power law type trend, which I think is a solid base case for the future of Bitcoin. A question that I kind of have for you is like, okay, if this is very obvious, at least to us, and fairly low risk of it playing out, like Bitcoin doesn't really have to change for this thesis to be correct. Why does the market not front run this? If Bitcoin is at $10 million, Bitcoin is still relatively not huge, not terribly huge. Why does the market not catch on to this, sooner rather than later?
Yeah. Well, how would you answer that question?
It's it's something that I've struggled with for some time. I mean, I think right now, like I would say, we're seeing early adopters that have made absurd amounts of money selling Bitcoin to BlackRock, to treasury companies, so on and so forth, and that cycle is probably going to keep playing out. Where like these extremely high CAGRs like are great, and if you're early, if you've been holding Bitcoin for quite some time, then you don't need, necessarily $1 billion or 100 millions of dollars. Like, you can kind of cash out a little bit or diversify if you still think Bitcoin could fall 60% or something like that. And so, but I don't know, it's just like, it's such a massive change and so few people have grasped that. Okay.
Yeah, I mean, I think it's look, it's sort of like, the way I look at it is there's certain massive changes that are immediately obvious to the person. So, for example, you sit somebody in front of ChatGPT for an hour and they become immediately aware that there's something magic going on, right? The same is sort of true with like the internet. You put somebody in front of a browser in 1995 and you say, hey, go to town on Netscape Navigator. And they're like, wow, this is amazing, or even Instagram, it's like, wow, I can take pictures of myself and upload them and apply these filters and share them with all my friends. I think Bitcoin is a lot harder to sell. Okay. Because I think if you say to somebody, here, you can transfer this, you can put your money in this address. Oh, it takes 10 minutes to confirm. And there's this long, not really very human friendly, address. And then you need to store it on a hardware wallet, and then you need to make multiple copies of different keys, and then you need to like maybe engrave them on a steel plate and put them in a vault. I think most people are like, I'm doing this. Why? Oh yeah, but you can send it to somebody. It only takes 10 minutes per transaction at minimum. Maybe it could take an hour. They're like, this does not seem like a technological, it's not a technological no-brainer like AI is or the internet. So I think, you realize it takes a while to realize, oh, and then by the way, there's, a million other cryptocurrencies that are competing with it. So, part of your brain is like, well, isn't this just like MySpace and Facebook, and there's going to be some new one that's going to take over Bitcoin? So I think there's a lot of reasons why Bitcoin is not as obvious as other tech changes in the world. So while it is true, it's not happening that quickly. The adoption for Bitcoin is even slower, right? So the adoption for Bitcoin is growing at about 15% a year, right? If you look at the power trend for new addresses, right? So how many new people come to Bitcoin? Well, it doubles every 4 years, 3.5, 4 years. Now, that's, if you keep tabs on it, that's pretty big, right? So it's maybe 50 million today, I think, the way I look at it. Maybe it's 100 million 4 years from now. Maybe it's 200 million 8 years from now. But, that's not like Instagram. Instagram went from 0 to 1 billion in 2 years, right? ChatGPT went from 0 to 1 billion daily users in like 2 years, So, we're dealing with a slower adoption circles thing than any of these other things. And I think people are nervous, look, they're nervous about entrusting their nest egg that's taken them decades to make. They're nervous about entrusting it to a completely new piece of technology, right? So the adoption rate is slower, and I think it takes a couple years really of holding Bitcoin before you're really comfortable enough to kind of, at least for me, before you're comfortable enough to tell your dad to say buy it. You know what I mean?
Yeah.
You don't just buy it and say, hey, I saw this new thing, Bitcoin. Hey, Dad, you should buy it, put all your retirement money in it.
Yeah.
More like you get 2 years, you kind of start getting really orange-pilled. You read everything about it. You educate yourself. And then you're like, Dad, honestly, you should put a little bit of money. You should put some money into this thing.
Yep.
And I did that with my dad in, I think, 2020 or 2021. Boy, he's really happy he did now, But, it's there were those really awkward Thanksgiving dinners, in 2022.
Yep. That was an awkward one.
Yeah. So, people have been around longer than me have had those awkward dinners in 2018.
Yeah.
And, so I think it's a slow it's a slow process. So I think doesn't mean we're not going to get there or anything. It's just, we're going to get there slower than all of us want it to happen. And it's still fast, right?
Yeah.
It's still really fast. I mean, Balaji had this statement that, when history book looks at it, they're going to be like, one day Bitcoin was invented, and then just seems like just next day everybody was using Bitcoin. But that period is going to be like 40 years in between, right? So, but from creation to full monetary takeover, 40 years, that's pretty good. That is and Bitcoin is the fastest asset ever to go to $1 trillion in market cap. So, it is happening really, really fast. People are front running it. So I guess the answer to you is people are front running it. That's why Bitcoin is doing it. It's just, and what I think with the power law is just it's the statistical measure of the speed of how people are doing it.
Yeah.
They're doing it at this viral rate that is, currently about 40% in terms of price and about 15% in terms of addresses.
Yeah, I agree. That makes sense. And in the grand scheme of human history, like this is happening unbelievably fast. Like I definitely agree with that. I kind of want to shift more towards like the world once we're at $10 million Bitcoin and higher. I feel like a common topic for academics or like Keynesian economists would be like, okay, if Bitcoin is money or this form of money and it's deflationary or like its purchasing power is increasing every year in terms of like basic consumer goods, that's bad for the economy. How would you, and perhaps that's bad for a number of different reasons they might argue. I'm curious, how would you reply to something like that?
Well, I think the transition is going to be very, very tough, right? So transition is not going to be easy because, right now we're in a very credit-driven system. So, that big asset class of real estate has underperformed money printing, right? So if you look at the graph of money printing, it's there, M2, right? Real estate's sort of below that, right? So what does real estate look like in a world where you have fixed supply? Well, down, right? It's just a depreciating asset, which kind of makes sense, right? Like, why would you want to buy an old house? It's sort of like a car. You want to buy a car with 100,000 miles on it and pay more for it than a new car? No, So I feel like real estate's going to go down. It's just going to be, once we reach that point, real estate will be a forever depreciating asset, right? So for everybody who, all of my boomer cohorts who bought real estate and that's their main asset, well, their main asset's going to go down forever, right? So
I agreed. So do you think real estate investing as a whole will die, or will it be like more of a business? Like people will still build things and sell it.
Yeah, I think people will build, and I think right now in Japan, real estate is a depreciating asset. Okay, for various reasons. They have older generation. Nobody wants to live anywhere. It's a depreciating asset. People still build. They just sort of price the thing at how much can I rent this thing out, given that it's going depreciating, and I get a certain amount of rental for a depreciating asset, right? On the other hand, it's great for people, right? They get cheaper places to live, right? It's good. Yeah. So it's different does not mean it's bad, right?
Agreed.
So,
go ahead.
Yeah, I think that thing is it's good. Now, I think so much of our world is built around credit and around debt that I think it requires a complete rethink, right? That doesn't mean it's bad. I do think that, the current monetary economists are they're all, they think deflation is terrifying to them, right? Because it is. If you're in a world of heavily indebted, if you're heavily indebted, the last thing you want is deflation, right? Like, wait a second, you just took a 30-year loan out on a place and your place is worth less. Terrible, right? Just the only way that this makes any sense is if the thing goes up in price, right? You don't want to have a lot of debt with deflation. It is toxic. But what that means is there's going to be a lot less debt. A lot less debt. Now, the question is, do we need to have all this debt to make an economy? And my answer is no, you don't need a lot of debt. Debt, this amount of debt that we're living with is only a function of the fact that we have, this ever-ending supply of credit, but through the banks and through the central banks and governments, just, But I think all that stuff's going to end when we go to not end completely, but it's going to change dramatically when we get to a hard money system.
Yeah. So I guess like when we're at $10 million Bitcoin, which is still going to be like that hybrid system, do you think at that point we'll still have dollar-based mortgages and so on and so forth? Or will that be like starting to be phased out or become more expensive than maybe it might appear to be today?
Yeah, I think there's going to be both systems, right? And so the question really is the price of goods and services going to be more stable in Bitcoin terms at that point, or more stable in terms of dollar terms? So one of the things right now, if people say, well, I can't use Bitcoin because it's way too volatile, which forget the price of Bitcoin. Just talk about the purchasing power of Bitcoin, right? It's very volatile right now, right?
Yeah.
You can live for, let's say you could live for a year off one Bitcoin at 100,000, and then all of a sudden you can't live off of it at 20,000, right? Then you could live like a king off of it at 1 million, right? So I expect that the purchasing power of Bitcoin in terms of goods and services is going to be more stable 20 years from now than fiat. Fiat's going to be unstable. It's going to start getting unstable, right? I think that we're going to have, big inflation, big drops. I mean, we could see people, and I think a lot of people will be like, look, I just don't even want to deal with fiat, right? It's too unstable. So I think the same criticism that people have about Bitcoin right now, they're going to have about fiat. They're going to say fiat's too unstable. I just don't want to deal with it. I'm a Bitcoin only kind of shop. And I think people are going to start thinking in terms of Bitcoin more, and I think companies in particular are going to start thinking, okay, how should I look at my balance sheet? Well, they're going to have to do two numbers. They're going to, what's my balance sheet in Bitcoin? What's my balance sheet in dollars? Right. And did I make money in Bitcoin terms, or did I start losing money in Bitcoin terms, or did they make money in Bitcoin terms?
Yep, I agree. That's definitely.
So I think it changes a lot.
Where do you think we'll have that inflection point where Bitcoin becomes less volatile in purchasing power terms compared to the dollar? Like, will that be at $10 million Bitcoin? Will that be at 1 million? Will that be?
No, it won't be at 1 million. Yeah, look, 10 million, we're getting close to the end of this journey. Okay. Now, I'm not saying the end, but, at 10 million, Bitcoin is probably the largest currency.
Yeah.
So it's like when you get to right now, you rank the currencies, dollar, yen, won, yen, pound, Bitcoin, it's down there. But like, Bitcoin will be the largest currency in 20 years, right? And so once you get to that largest position, and it'll be bigger than gold, right? So that kind of number I think it forces people to start denominating things in Bitcoin. And I think it will also be used as a means of exchange, right? So I think, even well before 20 years from now, I think Amazon will take Bitcoin, I think you will be able to pay your rent in Bitcoin. I think you will be able to get Bitcoin at your bank. I think Bank of America will sell you Bitcoin, and they'll have a column to see your balances in Bitcoin too. So I think we're going to sort of actually be in a hybrid system 20 years from now, and it'll be hybrid on all ways. You go to Chipotle, scan something, pay with sats. So I think that's going to happen then. So I think at this point, it's not going to be a secret anymore at all. Most people will have some kind of Bitcoin in some form. Not everybody, but some, will have some savings in Bitcoin. And I think that's really roughly when it happens. And I think there will be some institutional things that happen. I think, maybe oil starts trading in Bitcoin, sort of, it becomes more of a neutral reserve asset and a way of doing international settlements for trade. And I think that it's going to take two decades to do that. I mean, it could happen in a decade. I just don't think we're quite ready for it, And I don't think we're getting to $10 million Bitcoin in a day. I'd be shocked. I could be wrong, That's not what the power law. The only way I see that happening is if we have some major crises, where the wheels just start falling off the train. But I'm sort of more of almost like the Joe Carlisale school of, we're going to be able to contain the problems by printing more money, by coming up with more fixes, and by kicking the can further down the road. We can kick the can down the road for 2 decades, I think. We're not going to blow up the system. So I'm not we only have 5 years left, and we're all going to be eating, dog food under a bridge. I don't believe that. I think that we're going to be living in very much a kind of world like we are now, except Bitcoin will be a lot higher. And I think things are going to be in Bitcoin. And it'll have infiltrated its tentacles in a lot of finance.
Makes sense.
Yeah.
So we talked about real estate kind of going down forever in Bitcoin terms. What do you think about an index like the S&P 500? How total return, including dividends?
Well, here's the problem. Here's the problem with in a pure Bitcoin world, right? What's world GDP growth?
It's what do you think?
Yeah. What?
Oh, GDP growth denominated in Bitcoin?
Well, if you're saying world GDP, what is world GDP? Well, like by definition, there's only 21 million Bitcoin. So if one country has growth in Bitcoin, then another country has a loss in Bitcoin. We're entering a zero-sum game, right? So you can't have companies that make Bitcoin unless somebody else is losing Bitcoin, right? So it's going to be very tough to make Bitcoin, right? Now, again, you don't need to make it because your Bitcoin is becoming more valuable all the time, right? You could actually lose Bitcoin. You can have negative Bitcoin growth and still do great, right? Your standard of living is increasing. The purchasing power is increasing. But, it's going to be a rare company that actually makes Bitcoin, right? It's going to be really tough. I think right now it's not the bar to making fiat return is not that hard. The bar to making a Bitcoin return is going to be very hard. Which sort of tells you that, a lot of these companies, they're going to have to, it's going to be, that's where you're going to have the problem, right? Is how do you make a Bitcoin return? How do you justify a lot of companies out there, right? In a world with, fixed supply. If the thing that's measuring it is fixed supply, how do you don't, right? And how do you justify lending Bitcoin? I mean, you got an asset, a house, and somebody says, well, great, I'd like to borrow some Bitcoin against my house. Great. Well, your house is depreciating at 5% a year in Bitcoin terms. You want me to give you a down payment and you're gonna pay it back? How are you gonna pay it back? Right? The collateral is going down, way down, right?
Yeah.
So and probably wages are going to go down in Bitcoin terms too. So if I say, you got to pay your mortgage is, I don't know, let's just say your mortgage is a million sats a year, right? Well, how do I know? Right now you can make a million sats a year, but 10 years from now you're not going to be able to make a million sats a year, right? That's a lot.
Yeah.
So I don't know if I can lend it to you, Joe. Like a million, that's a lot. A million sats a year, I can't lend it to you. I'm going to ask a really high interest rate, and it's going to be really hard to qualify for that, especially with this crap collateral you're giving me that's losing 5% of value. Right? I mean, in a decade, your thing's worth half as much. I could repossess the house. Great. I get half of my loan. Right.
Yeah.
So I feel like I think lending is going to be really challenging. I really feel like the housing market is going to completely change. Right. And you realize, and I think the same thing is true with stocks. I think so much of the stock market and the housing market is just an illusion that's based on money growth. When you take the money growth out of it, it's like a lot of stocks return zero, net of money growth. So why do people store their money there? Well, they could just store it in Bitcoin. You know what I mean? So it's just, but that goes to a bigger question is, with AI, a lot of human activity is probably not worth investing in. Right? Like we're kind of not that useful. Ultimately, the machines are going to be useful, not us. Right? So, how do we get paid? Well, you got to tax somebody. So tax the machines, right? Don't tax rich people. Just tax the machines. They're going to, put an AI tax somewhere, but that's going to disrupt the whole fabric of society. We're kind of getting into more of a socialistic model. That generally doesn't work very well. People take advantage of it. So, I think all this world I think it's inevitable, right? Because I think Bitcoin is inevitable, but I don't think it's all positive. I think there's a lot of negative things that go along with it.
Yeah, there's definitely a lot of so much change that could happen in such a relatively short period of time that it's almost impossible to predict how this is going to play out. A lot of
things I can say, if you don't have Bitcoin, you have the chance of something very bad happening to you is high. With AI, the advent of AI, you have a very good chance of losing your job in the next 10 years, right?
Yeah.
I mean, unless you work as a plumber, and I'm not even sure if that is 100%. At some point we're going to have these humanoid robots that are going to do plumbing jobs. But you might want to get some in case it catches on. It's kind of, the thing Hal Finney said. But it's I do think that it's going to be extremely challenging dealing with this, where this takes us as a society. And yeah, I do think there's going to be political ramifications too. I do think that the other thing I think about AI is whether it's the left or the right that is in charge, they will know everything, right? So we're going to have an era where you're not going to be able to hide, really. You know what I mean? So, they're going to get you no matter what in terms of, even spending your Bitcoin or whatever. They're going to get you. But I do think that, right now getting your Bitcoin could be kind of the lifeboat to this transition. And then ultimately, I think it's very positive, right? Like ultimately, I think, once we transition to the new world order where the machines are doing all the work and we have the stable monetary system, I mean, it's great. That's a great place to be. And that's, I just think it's going to be really it's going to be, we've never gone through anything like this. So any historical analogs are not, they're not accurate. Like a lot of people say, well, you know, the Industrial Revolution, they said it was going to put everybody out of work, but everybody found jobs. And it's true. But maybe this time is different. You know, maybe this time actually we do have major problems with it. On the other hand, maybe AI just creates so much abundance and wealth that, you know, that counterbalances things. So either way, I think as an investor, you're going to do incredibly well if you can manage to hold on to your Bitcoin the next 20 years, you know?
Yeah. So thinking back to like an index like the S&P 500 in particular, like if real estate perpetually goes down, do you think a broad index of stocks, how do you think that will do in particular?
I don't think it'll do well. I think it's going to really underperform Bitcoin. But I do think that, look, there's this mantra of 60-40. And, you know, it makes no sense to me because if you look at the historical returns, Bitcoin's winning in 8 out of 10 years. So where's the science behind that 60-40? There's no science, you know. This is like the science behind bloodletting or something. You know, like there's no science there, you know. It's just, but people, there's, you know, hundreds of thousands of financial advisors that are just parroting that stuff. And so I think it's, you know, I think most people will get it wrong. You know, I think most people are going to get it too late, and when they do get it, they're going to be they're going to think too short term, and they're probably going to get caught up with too much leverage, like they always do. And so, I just feel like that model is wrong. Though. The 60-40 model is just an incorrect model, and I think stocks are going to underperform. And I think, you know, I'm a little older, so I kind of remember from when I was first on Wall Street, stocks were not such a hot deal. Yeah, people were not worshiping the indexing gods. You know, they didn't think you should put all your money in S&P 500. So this is more of a newer thing. I mean, it's not new now, but you know, I say especially over the last 30 years, you know, indexing has just gotten really, you know, big. And you have all these advisors who they've gotten very good at collecting assets and putting them into these index funds. And so, you know, they haven't gotten yet good at collecting assets and putting them into Bitcoin funds.
Yeah.
I think that's going to start, but I think there needs to be this new religion of Bitcoin asset allocation that needs to happen. And it takes a long time. I mean, Vanguard was started in the 1970s, right? And it didn't really take off until 1990s, you know. So it took 20 years of just, you know, John Bogle pushing this idea that you need to index. And, you know, and probably right now is exactly the wrong time to do it. But it worked great, you know, for 30 years.
Yeah.
But I just think its time has come. You know, Japanese equities worked fantastic from 1950 to 1990. 40 years, just unbelievable, right? Biggest bull market of all times. Everybody in Japan did great. And then it stopped working. And equities just now got back to where they were in 1990. Just now, you know. So 36 years later, we're back to where we were in 1989.
Mm-hmm. Related to passive, do you think the concept of the diversified portfolio, even that could be in a way like on its way out? Like in a way, in my mind, like Bitcoin is the ultimate passive investment. You know, you benefit from technology deflation and global adoption of this new form of money.
Yeah, I think so. Because look, I think, you know, if you believe that we're kind of really going to this mode where we're going to look at all assets in Bitcoin price, then you own one Bitcoin, you have 1/21 millionth of everything, right? You kind of don't need to diversify. You get 1/21 millionth of everything on the planet by owning one Bitcoin. that's great. You know, you don't need to know what anything is. That includes all the houses in Palm Beach. That includes all the AI companies that are ever going to be built. That includes all the next Picassos and everybody else who's going to create works of art. It includes everything. So you don't need to diversify. If you get the unit of account, you don't need diversification. I think the only thing you could sort of argue is you might need some diversification into cash because you might have some cash needs that you can't borrow against your Bitcoin for, and you might, this as a contingency thing and potentially also to buy more Bitcoin in case it goes down. So I think, two assets is enough. Bitcoin and sort of short-term treasury bills. That's all you need. If you want to do one, you can just do only Bitcoin. I would sort of say that's better for younger people than older people. It's also more psychologically difficult. If you have a steady stream of income that you can live off of, yeah, no problem. You can just go all Bitcoin. But if you're kind of retired or semi-retired, I think it's just tougher. A lot of people, and it's just a brain thing. I think a lot of people tend to think in terms of yield. They're like, well, I need some yield in order to live off of, right? And I've had many discussions with people like British Hodl about this. It's like, well, here's the thing: you need Bitcoin for the investment, and then you need yield to pay the bills. And I'm sort of like, well, no, you need something that goes up, and then you can sell that thing, or you can borrow against that thing. So you don't really need. I think that's just a mental trap that you might need some yield. But I do think there are a lot of people who still think in terms of yield, right? And so I think that Saylor's approach of sort of creating a yield product for those, that $30 trillion of people who are, hold money in treasury assets under a year or money market assets, that's enormous, right? Social Security, that's a lot. A lot of people would love to have 10% yielding interest, and they don't want Bitcoin. They don't want that. Maybe they don't. 20 years is too far for them. They'll be like, I'm going to be dead in 10. I don't care. I just think I need something for the next 10 years. I need 10% a year off for the next 10 years. I got $1 million. I need $100,000 a year for the next 10 years. And I'm going to give whatever's left to my kids. I understand that, right? So that there are some people who want no volatility. They want 10%. And then I think everybody else, if you want volatility, if you want return, I don't think you're going to get much better than Bitcoin. I don't see it. I mean, there's always some hot thing, right?
Yeah.
But it's not worth chasing, in my opinion. Like, it'd be worth chasing if Bitcoin wasn't as clear an argument as it is. Like, if you thought, well, Bitcoin, if I looked at Bitcoin like a technical analysis chart, and I looked at it just as a trade, then I'd also be like, well, how much? Okay, I'm gonna put some in Bitcoin, but I'm gonna put some in, I don't know, Google, Amazon, IREN, you tell me, whatever hot thing is. I mean, I own a few of these things, but at the end of the day, I believe very strongly in Bitcoin, so I'm very comfortable having, super majority of my money in Bitcoin. I don't care. It's fine. And I think, the Kelly criteria for kind of mathematically how much you should own, somewhere in the 70-75% range, just based on the past historical returns. So I think I just think that change is going to be it's going to take a while for that change to happen, and for most people to come to that conclusion. So, yeah.
Makes sense. Do you think wealth concentration is going to, like, a $10 million Bitcoin is a lot of the wealth in the world held by just early Bitcoiners? Is it held by early Bitcoiners that sell over time to, new adopters, and wealth gets more distributed over time? Like, do you think we're going into a world where wealth gets increasingly concentrated, or that in a world where wealth gets, broad and abundant for everybody?
I think it's getting, let me put it the direction. I think Bitcoin wealth is dissipating.
Yeah.
Okay. So I think, there's a few people who have a lot of Bitcoin, but they're few and far between. You know what I mean? They're really few and far between. And they're selling, right now. They're selling. They're not holding. They're selling. The whales are selling. So, are they going to be around at Bitcoin 10 million? I doubt it. I think most of them will have sold way before that. And they already have. I know a lot of people who had a lot of Bitcoin in 2013, up to 2017. They don't have any Bitcoin anymore. I don't know. I'm sure that's my observation. A lot of these cycles have killed a lot of people. They've made, they're really tough, these cycles, and there's a lot of people thought they were a little too smart. They thought they could time it. They didn't. They never got back in. They sold, but they never got back in. They sold, it went down, then it went back up, and they never got back in. So, and then they buy a house, they do something, they start a business, so I think it's, it's not like there's so many of these early Bitcoiners. There really isn't, it's pretty broad. And I think you got a whole new class of them that just got minted last year with the ETF, right? These are all new Bitcoiners. They don't own Bitcoin, they own IBIT, and it's a small part of their portfolio. It's not the biggest part of their portfolio, so it's permeating everything right now. So I'm not convinced that there's just this. It's not like crypto, right, where you have the founder of XYZ protocol has 50% of XYZ protocol, right, and flies around in a private jet. I don't see that with Bitcoin. I don't know. What do you think?
Yeah, I definitely think that Bitcoin wealth is certainly being distributed more and more over time. I feel like right now, like I've mentioned earlier, it's like IBIT and treasury companies are probably just stacking coins from people that have held Bitcoin for a long time that are incredibly wealthy and are just giving up some of their gains, to not have to worry about any future drawdowns, or, they have enough money, like might as well, consume or invest in, the company that they want to start or whatever else.
Right.
I kind of want to dive a little bit deeper into that. The one idea of like, okay, we talked about real estate, not really a good investment. Index, S&P, probably not necessarily a good investment, especially for the next 20 years. But even, beyond, once we're at $10 million Bitcoin, it still may not be a good way to save or invest.
Also, yeah. And I would say regarding companies and stuff, it's sort of like the internet. If you looked at the internet, and I have a really hot company during the 2000 kind of internet craze. And I would say, and I knew a lot of tech investors, and I would say it was not at all clear who was going to win the internet. It was not clear that, Facebook didn't exist, right? Amazon existed, but a lot of people thought it was like an overpriced retailer. So people thought Cisco looked really good, there was just, nobody really saw the way it was going to play out. Nobody saw Google. Search was not viewed as at all interesting. People thought Yahoo was pretty good. That didn't end out at all as a good play, right? So it's pretty hard to to pick the winners. Like the AI thing's going to be huge, but who's going to win? You know, what is really going to be the winner of AI? Not clear, right? You know, there's this massive fight going on between these models right now. Well, that may mean they all go down. You know what I mean? In terms of they're all great for humanity, but maybe they're terrible businesses.
Yeah.
No, right? We don't know. Also, it's not clear that even the tech giants are not going to get completely disrupted, right? So, you know, well, Google's doing some stuff in AI, but their core business is kind of being disrupted by AI. I don't use Google as much as I used to, right? I search with OpenAI right now. That's kind of my go-to search engine right now, and I think that's happening with a lot of things. So I think the tech world's going to be severely disrupted by AI, and you know that's 50% of the S&P right now is tech, because those Mag 7, and so Apple, they've kind of bungled AI so far. So I think there's a lot, the investment case for stocks, for these, the AI tech names, who knows? But it's not as clear as it used to be. It used to seem like the giants are going to get bigger and bigger and bigger. Well, maybe not. Maybe Apple could be in trouble. Who knows? It doesn't feel like they have the lock on. They may not have the lock. The UI may not be the GUI anymore, right? We may be entering a world of the UI is the chatbot. Chat's the new UI, right? We don't need to like OS 10 and iPhone and these things. And so in that world, I think a lot of these things are going to get rebuilt, and some of these things are going to look a little bit like the MySpaces. And they had these huge valuations, but maybe they're not that great of a product. I think a lot of this old tech stuff feels very old now, like Microsoft Teams and even Slack, or these things don't feel as fresh as they once did. And so, considering the valuations that they're commanding, the largest valuations, maybe they should have much lower PEs than what they have. And so, I think they're risky. I think it's a risky proposition. And while all the money printing does, a lot of it will find itself going there. I think the Bitcoin thing is more obvious, in my opinion.
Yeah. Is there a point where you would actually, not cash out of your Bitcoin, but reinvest in technology companies or something else? Like in my mind, take it to the extreme. If I could buy Apple for 1 sat, I would buy that, right? And it'd be trading at a 0.00001 PE ratio, and that would be a good investment. But obviously, that's very unrealistic. Is there a point where it actually does make sense because the valuation of really profitable businesses has dropped so much that you're like, okay, I will deploy some capital into this?
Yeah. It may look, I think that a lot of the world that we know it probably is gone. I think we have another couple of years of sort of normal years, and then I think we're off to the Terminator. That's kind of my global thesis. So, I don't know. I think, should I invest in Skynet? Maybe, but that's, I think we're going to be in such a radical world. I think anything that's not part of that hyper radicalization high tech world, I'm totally uninterested in, right? Forget Apple. Let's talk about Applebee, Or, would I invest in a chain of fast food restaurants at any price? Probably not. I think, it feels a little bit like that old world. Like there was all these people who were like, even smart people like David Sachs, right? They bought into like commercial real estate in San Francisco. That stuff's not coming back. You know what I mean?
Yeah.
Like, I noticed that Trump's had this casino, the Taj Mahal in Atlantic City, and I think he sunk, I don't know, 200 million into it, and it's worth maybe $10 million now or something. Like nobody wants to touch it. It's just like it's dead, right? So I think that there's catching falling knives and trying to pick up cigar butts, as Warren Buffett would call them. I don't know. I think that might have been useful in one point, but in a world where we have super intelligent computers, like I think that's more the world we're entering. I just don't. I don't think it's like value. We're going to see value in any sense of it. I think we're going to see just massive change, right?
Yeah.
And so I think in that world, I think it's going to be, you've got to be an amazing stock picker. And I think it's going to be more like, picking, I own this, Oklo, this nuclear reactor company. It's up 16x over the last 24 months. It's unbelievable, and I've owned it for 2 years, Things done amazing, right? Literally at 20x, and there are a few things like that, but is it overvalued? Of course it's overvalued. It has nothing. It's just pure theoretical. They're going to make these small modular nuclear reactors. But yeah, the world probably needs small modular nuclear reactors. So it's exploding, right?
Yeah.
But I think when you're looking at something like Apple, maybe Apple is the next BlackBerry, right? And, that did not turn out to be a great investment. I had friends of mine who tried to buy BlackBerry on the way down, what I mean? And doesn't work. Nokia, how's that doing? You know what I mean? So a lot of these stories, these tech stories, that they're only good on the way up. Once they start falling, they really fall hard.
Yeah.
So I don't know, I just feel like we're going to be in much more of a transformative phase, and owning things like, you might say, well, I'm going to go really conservative. I'm going to own a parking lot. Except now you have Waymos and everywhere, right? So nobody wants to park anymore, because why not? You just have the car run 24/7. So I just think that a lot of things, if you want the safety thing, I think probably for the next 20 years, it's just going to be Bitcoin. That's it.
Yeah.
So the way I would look at the portfolio construction is, 70% of your portfolio should be in Bitcoin. And then the other 30% kind of like really kind of whatever you're fascinated with, whatever your passion is, right? If your passion is, I know you love golf,
Yeah.
Maybe there's some new golf course that's being developed somewhere, or some golf club technology or something, right? Yeah, invest in that. Maybe you're not even going to make any money in it, but it's going to be fun, right?
Yep.
And that's kind of, I think, is a good, because we were talking about it at kind of this conference that I just finished.
Yeah.
Somebody was like, what's in the 30% if you're 70% Bitcoin? I said, somebody raised their hand and said, passion. I think, that's great. 70% is your passion, your passion investments, and I think that's a good place to go, because, not everything should be for money anyways, 30% could be, I love, Guatemala, and, I'm passionate about the country, and I want to start a school in Guatemala. Great. Start a school in Guatemala, and that's your passion. Or, I love cooking, and I want to open a great restaurant in, Seattle, because we don't have, traditional French restaurants in Seattle of this type, Great. Well, I think having stuff that's not, we were talking with Rob Clausen today, and, he was sort of saying, Fred, I have a confession to make. I kind of got really into the NFT world. And he goes, yeah, I didn't do very well. And I was like, yeah, probably probably as your investment advisor, I'd say not to spend too much money on NFTs. And he goes, yeah, but like, you can't take it with you anyways. So it's like, you can't just buying Bitcoin is not necessarily a great way to spend your life, you know. So you gotta spend it. You gotta break the rules to some extent. And I say with real estate, I do like living in my own house. You know, I would say if it meant not stacking, I wouldn't do it. You know what I mean? If you can do both, okay, yeah. Do both. But there is a lifestyle value to owning your own real estate. There is a lifestyle value. It's fun to do startups. I'm not 100% sure how many more what the world of startups is going to look like 20 years from now. I don't know. I think right now is actually a great time to do startup. Personally, I think we're about to enter this golden age of AI startups. Because I think it's just sort of like when the iPhone came out. There's all these things you could do with iPhone, right? With mobility and stuff. And when the internet came out, that was just all these things. There's the technology enables all these things, right? And they end up being like DoorDash, right? DoorDash couldn't really exist without iPhones, not just for the person ordering it, but for the dasher, to see where they are and everything, for you to see where the dasher is on the map. And now just all of a sudden, everybody's ordering DoorDash twice a week, So, Uber, DoorDash, these kind of things, were direct descendants of the iPhone invention. I think AI, there's all these new things that can be built with AI, and it's just kind of the world wants them. The world wants better AI things to do everything.
Mm-hmm.
And so I kind of feel like AI is one of these enabling techs that's just unbelievable, right? I think diving into that and doing AI for everything is probably a really good idea. And yeah, the failure rate's going to be high, but the failure rate with tech was high too. I did 10 successful exits. One or two failures, but they're not catastrophic. But I've done a lot of tech stuff, and I've invested in a lot of tech deals, and I have a pretty good track record there. So I think starting your own business is another thing you can do, with your time. And it's another thing you can do with your money,
Yeah. I definitely agree with what you said in regards Bitcoin might be on a risk adjusted basis the best thing that you can buy. But at a certain point, we're going to have so much wealth because Bitcoin went to $10 million and higher, and AI and technology deflation created so much abundance in basic consumer goods like housing and food and whatnot that you're going to have so much wealth that you might start a space company. Or in a way, Elon Musk is kind of a prime example of where we're all kind of going, where he has so much money, he can kind of do whatever he wants with the money. SpaceX, maybe it's going to make a lot of money, maybe it's not, but it's really it's what he wants to do. And I agree, people are going to build that school in Guatemala or
right.
build a
or
golf
Neuralink, and
yeah,
creepy implant to put on your brain. Okay, exactly. I'm not volunteering for that, but okay, it's something you can do. It's interesting. It's certainly interesting.
Yeah.
So I do think there's going to be a lot of innovation. I think we're headed into this massive world of massive innovation. And one of the great things about Bitcoin is sort of a, Saylor said this many times, and others, right? That, the Bitcoin story doesn't change. Unlike the stock story, you have to kind of stay on top of what the Fed is doing, what the competitors are doing, and all the rest, right? Bitcoin, the story is going to be the same, and we could have the same conversation 2 years from now, and it'll be the same conversation. Bitcoin might be a lot higher, but we'll have the same conversation about Bitcoin 10 million. So, as much as, you and I are both passionate about Bitcoin, and so, we kind of want to we're like Paul the Apostle, wandering the earth, trying to, convert people to this new thing called Christianity. I feel like there's a little bit of that going on, and but you don't need to, right? You can just buy Bitcoin and do whatever you want to do, and Bitcoin will take care of itself. And you store it properly, or buy the ETF, either one, and you're good. You're generally good. You don't need to keep tabs on it every day. You don't need to look at it as much as we do, or try to predict what it's going to do tomorrow. It's going to do well, and I feel like whereas that sort of sleep and just get rich kind of deal. Even real estate, was the closest to that in the past, right? They say, you can only get, there's only so much beachfront real estate, and there's only so much excellent. But a lot of people got in trouble with beachfront real estate in Florida. And that Florida real estate was actually the epicenter of the 2008 crash. So could we have another 2008 crash? Yeah, I think we very well could. I mean, some of these asset classes could completely crash relative to, well, certainly relative to Bitcoin, but just in general, I think as people get over leveraged and with, and stretched with the valuation stretching, these things, we could have a crash in traditional markets. I'm not saying it has to happen, but it could, right? So we could have another 2008 type event. We could have another COVID type event. We don't know, right? But if I had to guess, I think there will be some kind of event between now and Bitcoin 10 million. Yeah. So, it feels like there's going to be some oh shit, event, right? That we're basically, what the hell do we do? The world is totally changing. And we've got that, oh crap, I can't get money out of my ATM, whatever, there's nothing on the shelf. So,
yep. No,
we're likely to have some, if you look at the path from here to Bitcoin 10 million, there's probably some crash on the way. And it may not be a crash in Bitcoin, or it might be a partial crash in Bitcoin, but it may be just a crash in everything else. So, I don't know. That's where things get, I feel like a lot more safe having all the Bitcoin, and I think you do as well, right? I think it gives you that feeling of safety.
Yeah, totally. Yeah. I mean, in a way, Bitcoin's the only asset that you can truly own. So I agree. Fred, this has been awesome. I appreciate you sitting down to do this. How about sharing the book that you guys just published?
Okay, yeah. Well, great. So this is an author's proof, but it's Bitcoin 1 million, right? So 21 chapters, obviously. And we go over every asset class, and really we've managed to pick them into 21 categories, like gold, real estate, Bitcoin, Bitcoin being the apex predator. We have 21 categories, and each one's a pretty simple read. And the book is, we're trying to orange pill people just by having all the info in one place. And so yeah, and we have an Audible coming out in a couple weeks. So,
are you guys number one on Amazon yet?
We are.
You passed Ray Dalio? Wasn't he above you?
Well, on Kindle we did. So we passed. Okay. We passed. We were number one in Bitcoin, monetary theory, and macroeconomics, which is, I just get a kick. The fact that we were past Ray Dalio in macroeconomics kind of gives me a little chuckle. That's awesome. Also good for my debates with Joe Carlosali. He always loves sort of kind of stressing his macro chops, So I'm like, wait a second, you're talking to the number one author in macro.
I love it.
I can see him just going, But yeah, I mean, it's not going to stay there forever. Natalie's got a book out now. It's coming soon, pre-release. Yep. So, I wish her well in the book. You can't have enough books on Bitcoin, but I do think that our book is very different. It's very different than, it's very different from the first Bitcoin book we wrote, which is sort of about the history of Bitcoin. This is all just kind of like our conversation today, which is all this looking forward. How do we see things, and kind of putting a timeline on things a little bit more. Our target really is to see if we can get some of these financial advisors and investor types, and they're not really interested in Lightning or who Satoshi was or any of that. They don't care, They just want to know, kind of to your point, like, how's this thing compared to stocks? What percentage should I own? How should I own it? Should I own the ETFs? What should I do? So it's more like Bitcoin for investors, that story is kind of the story where I kind of added some value. I think why I have the following that I have on Bitcoin is, and I got very interested in the Bitcoin ETF early, and a lot of pure Bitcoiners were not interested in Bitcoin ETF. They were just like, well, not your keys, not your coins, etc. I was like, wait. All my friends are not going to put their money on, as great as like Unchained is and all these other things. They're great for a guy like me who understands that, but my friends don't. So, the ETF is good for the rest of us. And so I was very bullish on that, and I continue to be a champion for everyday investors to get allocation to Bitcoin. And so I think that's kind of where my angle is. I'm more of a Bitcoin as an investment, and not necessarily, Bitcoin as, this super techie side of it, the wallets and everything else. Although I understand all that, but it's just, I don't think I have much to say on that. Look, I'll let Adam back and others opine on, some of those very technical aspects. But look, I feel like the thing that we need to talk about is getting people higher up in terms of Bitcoin exposure. So if my book does that in any way, it'll have been worth me writing it. And so I feel like it's having a little bit of success there. So people are looking at it, they're like reading it, and they're like, I should increase my percentage that I have to Bitcoin. And that's it. That's all. I mean, Bitcoin's been kind to me, so I'm happy. If I can orange pill through my book, I feel like that's a good use of my time. But
I love it. Everyone needs to go order your book.
Yeah, it's it's $20 on Amazon. Kindle version's $10, so it's not expensive.
Awesome.
If you buy somewhere, if it helps you get more orange pilled, it'll be worth the $20.
Agreed. Well, Fred, thanks again so much. This was a great conversation.
Thanks. I'll let you continue.